Hi, this is Garrett Sutton, and you're listening to the Average Joe Finances Podcast.
If you're watching this on YouTube, make sure you smash the like and subscribe buttons. If you're listening to our podcast, go leave us a 5-star review. All of our links can be found in the video description or show notes below. Hey, welcome back to the Average Joe Finances Podcast. I'm your host, Mike Cavagioni, and today's guest is Gian Pazzia. Gian, we were talking a little bit before I hit the record button. Pretty awesome story. Both of our families came from Italy a couple years ago. But it's pretty awesome to see where you wound up, where I wound up today, both very far away from the East Coast. Welcome to the show.
Thanks, Mike. I'm really excited to be here.
Yeah, I'm excited to have you. I want to start this off the same way I start every podcast episode, and me and my listeners would like to know more about you. So could you share a little bit about yourself, share your story? Who is Gian Pazzia?
Yeah, thanks. You mentioned before the show, your grandfather immigrated from Italy. Both my parents were born in Italy and immigrated to the U.S. I grew up in Boston. Now I'm in L.A. and humble beginnings. My parents definitely were hard workers, didn't grow up with a lot of money. And for my dad, he did have a very good grasp of saving and finance. I did get to learn from him. He started investing in real estate, saving money that he earned as a restaurant, pizza shop owner. All right. And buying some duplexes and triplexes in the Boston area. And he built wealth that way. And now here I am today. I went to school for structural engineering and I ended up working for some pretty big tax and accounting firms. So now I'm in this tax and accounting space where I spend most of my time trying to help businesses, real estate owners, and even their CPAs find massive tax savings from different tax credits, incentives, and proven strategies.
Okay, right on, right on. Yeah, that's some story too, though. And I think seeing what your father did at a younger age put a bug in your ear or put a bug in you to say that, hey, there's something there, right? To build wealth, there's something there in real estate. So what made you want to go to school for structural engineering?
Yeah, of course, nobody knows what they want to be when they grow up. But back then, I had math and science was my thing. So, of course, what was it now? 30 years ago, engineering was what people did when they liked that kind of thing. Now people do business and finance, but that's how I ended up in that degree. But sometime around my junior year in college, I realized structural engineering is sitting at a computer and trying to figure out like how thick the beam should be in a building and how like thick the bolt should be that attaches to the beam in the building. And it required like 5 hours of analysis to figure that out. And I thought, I can't do this for the rest of my life. So when I graduated, I specifically didn't want to find a job at an engineering firm. And I found a job with a company called Arthur Andersen, which was one of the biggest CPA firms in the world. And they were looking for civil engineers, and they needed civil engineers to do something called cost segregation studies for these massive Fortune 500 companies, like the big casinos, like the Mirage, the Wynn. They were doing that kind of work for all the big pharmaceutical companies with huge manufacturing facilities. We would analyze the construction costs and essentially identify all the things in there that they could write off quicker. And back then, there wasn't a lot of expertise in people that knew how to do that. So for me, I learned it, and it was my launching pad to starting KBKG over 25 years ago.
Right on. Yeah. So getting into that, speaking about cost segregation, because we haven't had an episode on that in a long time here on the podcast. And I know a lot of things have changed over time from the last time I had a guest on talking about this, but can you explain in today what that looks like and what is cost segregation?
Yeah. So cost seg is a way for real estate investors to pay less in taxes by speeding up how fast they're going to write off parts of their building. So normally, when you buy a piece of real estate, especially if it's a residential rental property, you're supposed to write it off really slowly over 27 years or 39 years, depending on the type of building. But not everything in the building lasts that long. And so there's some funky tax rules. Some of them don't make sense, but essentially a bunch of stuff in the building, they allow you to write off much quicker than that, like over 5 or 15 years. So things like the vinyl plank flooring in your units, the cabinetry, appliances, even outside the site work like asphalt paving and so on. And a cost segregation study is a report that breaks the property into all these different components so that you can write them off a lot of times in year one. And so getting that bigger tax deduction right away means you're basically accelerating cash flow that allows you to reinvest that in other properties. And I like just to put some numbers to it. If you bought, let's say, a $270,000 rental home, and you've already separated the land value, okay, let's say the 270 is what the building is worth. That's what you get to depreciate. So normally without cost seg, you're going to get to take a $10,000 deduction each year for 27 years. With a cost seg study, you might get as much as 25% of that and get to write it off in year one. So now you're looking at a $54,000 deduction compared to 10. So you're increasing your deductions in year one by $44,000. So that's the value of cost seg. It's you're accelerating your deductions, and it's a time value of money play, which is the name of the game when it comes to real estate.
Yeah, that's huge. And I think when you look at the bigger picture, when especially with multifamily properties, a lot of times these operators are trying to get in, renovate, and then get out, not like fast, not like you were flipping the property, but over a 5 to 7 year period. And during that time frame, if you think about being able to write all of that stuff off right away, and you're already in the middle of doing all these renovations, that cost savings that you get, you can reapply that into the property itself, right? And accelerate what you're trying to do, maybe even accelerate how fast you get the building turned and go full cycle on it, which is pretty awesome. Every deal that I'm in right now in multifamily has had a cost seg study, and it's been extremely beneficial for our operators, but also for me as a limited partner. I also get the benefit of that as well. But speaking of that, let's talk about that too. For a limited partner that's in a multifamily deal, right? They're just somebody who's passively involved and they put some money towards this deal. How does the cost seg benefit somebody like that?
Yeah, good question. So the answer is it depends. Okay. In the real estate world, if you are considered a real estate professional,
Mhm.
you get all types of really good tax kind of rules that you get. And so you as a limited partner in that specific deal, Mike, let me ask you this. Are you considered a real estate professional for tax purposes, even though you're a limited partner in that deal? Or
No, no, I'm not,
okay.
unfortunately.
Okay. So if you're a true limited partner and you have income coming from, let's say you're a doctor or a lawyer, you make $1 million from some other business and you're investing in real estate, you can benefit from cost segregation, but not you have to basically ask your CPA a few questions. One is, are your other properties spitting off taxable income? Do you need more deductions to offset your income from your real estate properties? If the answer is yes, right? If you have a bunch of other properties, maybe you've had one in your family for 15 years, you're not getting money with deductions. It's a cash cow. You have a lot of income, right? So you go invest as a limited partner. Now you're getting a cost seg study done there. You're accelerating deductions, right? You're getting more deductions than you need on that limited that property that you're a limited partner on, you can now use those deductions against the other property that's spitting off taxable income. You have to basically understand your tax situation a little bit better when you're a passive investor, just to make sure that you can actually use those deductions.
Yeah, no, that's great information. And one of the things that I found very difficult is when I used to do my taxes on my own, trying to figure out how to do all of that was painful until I finally I actually have a tax lawyer who's been pretty awesome helping me with all that stuff. Yeah, I feel if you so for me, I have a W-2, right? So I work full time. So I can't bounce it against that, but I do get to claim it against other properties where I have income coming in from, which has been extremely helpful in kind of zeroing out how much income I'm getting from those other properties. So it kind of worked out that I staggered when I invested in these deals. So each time the cost seg happened, it benefits the previous deal, right? So it works out pretty good. And I had no idea what I was doing, and I just timed it. So it worked out pretty good for me. I guess there are people that actually strategically invest that way to make sure that they're constantly getting that cost seg that's going to carry over. But speaking of carryovers and things like that, I know, and I'm not talking about politics or anything, but during the last administration, they changed some rules, right? They changed some laws on cost segregation studies and how much you can actually deduct from that. So can we talk about that a little bit and what it used to be to what it is right now? And then where do you think it's going?
Yeah, sure. When Trump was first in office, they passed this huge tax bill, the Tax Cuts Job, it's referred to as TCJA. And one of the big rules there that was beneficial to real estate owners was they allowed for what's called 100% bonus depreciation on any kind of building. So 100% bonus depreciation means any company that's buying any kind of equipment or anything that has what's tax life, you look at the rules of 20 years or less, basically can write it off right away. Because normally these things you would have to depreciate over 5 years or 7 years, right? So bonus depreciation, when it went to 100%, you buy those things, you get to write them off right away. So the way it works for buildings is that anything inside the building, there's a lot of stuff inside the buildings that meets that definition of 5, 7, or 15-year property. And so that gets 100% bonus depreciation. That started right around the end of 17, and it was scheduled to phase out by, I want to say next year or so. It was like stepping down. I think this year it's at 40% bonus depreciation, then 20% next year, and then 0. So that was a big incentive for people could buy real estate and get these huge deductions right away. So now that Trump's back in office, they're working on a big tax package right now. I'm getting updates like every other day on it. And it's looking like that he's going to bring back this 100% bonus depreciation thing and make it retroactive to January 20th of this year. So anyway, yeah, I know a lot of real estate investors, it is part of their strategy, and they're looking forward to having that back.
Yeah, absolutely. And I think I just wanted to point that out because when people are looking at multifamily deals today versus looking at them 5 years ago, and you're looking at the returns on investment and everything, they were definitely much higher back then, not only because of the interest rates, but because of different benefits, the 100% bonus depreciation you can claim with the cost seg study. Now you're looking at these smaller rates of return, but they're still good deals. And I think all things said, you just got to do your research and make sure that the deal you're getting into is going to work for you based on how much money you're going to put into it. And I feel like it's important that people know that, yes, some of these things went away, but some of them might come back. And what's that going to look like in the future, right? Is this going to affect what interest rates are going to look like in the future? Who knows? I don't have a crystal ball. You don't have a crystal ball, right? But we could pay attention to market trends, right? And do market analysis and see what's going on. That's the best way to try to figure out where we're headed. Okay, awesome. All right. So Gian, you also, not only does your company do cost seg studies, but you also, we were talking a little bit about this offline, have a software, right? That people can use to actually do their own cost segregation study. And I'd like to talk about that a little bit because that is significant, right? I've not heard of anything like that before, right? I've always looked at, hey, you got to hire these lawyers, you got to get them in there and get this done. You need the CPAs, you need all the right people. You need a team, right, to come in here and do a cost seg study. So can we talk a little bit about how this software works and how it can be beneficial to investors?
Yeah, absolutely. Like you said, cost segregation typically requires a very detailed review of the building by an engineer and people that really understand tax. And you're typically paying somewhere between $6,000 and $10,000 for these kinds of studies on let's say a 30 to 100 unit apartment building. And so back in 2016, our company launched this product that I designed, and it was built specifically for smaller real estate investors because I saw that it just didn't pencil out for somebody that bought a single family rental property for $400,000 to get the benefits of cost segregation. It just didn't make sense to pay $4,000 or $5,000 for that. And created this software. It's a residential cost segregator. And it's on our website, which is costsegregation.com. And it allows you, the user, to go through and enter in all the physical characteristics of the property. It takes about 10 minutes or so. It's going to ask you like what kind of flooring is in the kitchen, and it's going to give you a pick list, and you're going to see like tile or vinyl or wood, whatever it is. And it's going to kind of walk you through different parts of the property, ask you how many parking spots are in the driveway, which appliances came with the property when you bought it, those kind of questions. And when you're done, you get a nice report that you give to your CPA that they can use to report on your tax return that separates the building and to all those components we talked about. And it costs $500. And it's super popular. Like I said, we launched it in 2016. It's used by thousands of real estate folks and even CPAs. And we've actually gone through IRS audit on it 3 times with 0 adjustments. And they were reviewed pretty heavily by IRS engineers.
Wow. Yeah, John, that's pretty freaking amazing if you look at the grand scheme of things, because it was never worth the cost for a single family investor to do a cost seg study on a property. That's why you only seen like multifamily investors doing things like that. But something like this kind of really opens that up to mom and pop who's only buying 1 or 2 or 3 properties, or even one a year or whatever. And they're just trying to build a portfolio that way. Because a lot of people, realistically, you don't need to have hundreds, thousands of units, right, to do well for yourself. You can buy a couple properties and do really well. And this is an opportunity for people to really save some money on their taxes that they can invest in another property, right? Absolutely. Which is huge. And for $500 compared to what the cost of an actual cost seg study is, peanuts. So I think that's amazing. And you guys built this in 2016?
We launched it in 2016, and we built it. So we built it for properties that are 6 units or less, and where the amount that you get to depreciate, the tax basis, is 1.2 million or less. Okay. So it works for smaller residential properties. Yep. We're actually going to be relaunching a newer version of it in October, and it's going to be usable for any type of property, commercial, restaurants, and self-storage facilities, that kind of stuff. And we're excited because with AI now, like it can go out and capture a lot of information for you. So it makes it even easier. And so just as long as you're letting AI do what it needs to do and then confirming that AI is finding the right information, then it can go pretty quickly.
Yeah, no, and that's fantastic that you're incorporating AI into it to make it more beneficial. But man, I wish I knew about this when I bought my first duplex, because that would have been super helpful. But I didn't even knew this existed. I'm really glad to have you on the show today to learn about this software. Okay, now I want to ask you a little bit more in depth about the software, right? Let's talk about my first duplex, right? So I bought this duplex, and if I wanted to do this cost seg study on it, right? Step by step, what would I have to do? I go to your website, and then
Yep.
what do I do from there?
Yep. You just sign up, you log in, I create an account. You don't have to pay anything. You actually get to start filling in the information about your property. It's like TurboTax for cost seg, right? So there's
Yeah.
going to be, right now, there's three kind of steps. Like step one is what's general information about your property. It's going to ask what the purchase price is, what's the address, what's the square footage, what's the square footage of the lot that you're on? Is there a basement? You check the box, yes or no. Well, what kind of is there heating and cooling? Again, there's pick lists. Then you move over to the interiors tab, where it's going to ask things like how many bedrooms and how many bathrooms. Is there fire sprinklers? It's going to ask about the different rooms, what kind of flooring is in the different rooms. And then you move to the third tab, and it's the outside of the building. Is there a detached garage or is it attached? How many parking spots in the garage? How many parking spots in the driveway? Is there a pool or a deck? You check the box for these things, or landscaping. And that's the meat of it. Then you can go to this third tab where you can put in what you think your tax rate is, just so it can estimate how much you saved. But then you can do all of this, by the way, without paying anything. And it'll show you rough, like a range of what your tax deductions are going to be, right? You can get all the way to the end and click and run the report. And that's where it's going to ask for payment. That's where you slide your credit card for $500. You get an instant report that you can hand to your CPA to put on the tax return. It also gives you a high level understanding of what your deductions are going to look like for the next 27 years that you own the property. It's going to estimate what those tax savings mean to you, give you what's called a net present value of accelerating those deductions versus spreading them out. And then finally, the last couple things to note is if you bought a property, do you still own that duplex, by the way?
No, I sold it. I actually sold it, took the profits, and invested it in multifamily.
Yeah.
So, yeah.
If somebody bought a duplex or any kind of property 5 years ago and they never did cost seg, you can actually still do the cost seg study on this year's tax return. And you don't have to amend. That's the best part of this. You don't have to amend, because once people say amending, like everyone freaks out. It's a pain in the butt. And in order to implement it into the current year tax return, you file this form. It's called the Form 3115, and you calculate how much you should have taken in deductions in the last 5 years. You compare that what you actually took, right? And that difference it is reported on the tax return, and that's what you get to claim in the current year. So anyway, our software will even do that for you, which usually your CPA is going to charge you like $1,000 to figure that out. But
Yeah.
our software does that for you.
Gian, that's actually a huge golden nugget. I think that what you just shared is so much value for my listeners right now. If you bought a 6-unit or less in the last 5 years and you're considering doing something like this, I would definitely go check out his website, right? Because that is absolutely amazing, especially since you can go back 5 years and get this cost seg study to claim those. Now, so actually, I want to ask about that too. Then, if somebody does go back 5 years, are they going off of today's rules, or are they going off of 5 years ago's rules?
Yeah, good question. So first off, you can go back as far as you want. It doesn't have, you can go back 10 years.
Yeah.
Usually, once you start hitting more than 10 years, it starts to become less and less worthwhile. So that's like the magic number. If you bought something in the last 10 years, you want to look at this. And I'm sorry, what was your question again? You asked.
Yeah. So when you go back, are you going off of what the rules were back then, or are you going off of today's tax rules?
That's right. So it is back then. So
Oh, wow.
if you bought it 5 years ago,
more betterer.
right, because that's when Trump's rules were in place, and you got the 100% bonus depreciation 5 years ago. So yeah.
Wow. So again, I think that is something that is going to be hugely beneficial to my listeners that are real estate investors in a small multifamily, like 6 units or less, or even more pricier single family options. That's pretty amazing. Gian, I really appreciate that. That is fantastic. So you said you've had thousands of people that have used this software. Is there anybody that has reached back out to you specifically to tell you, or I guess like a great success story that you've had of somebody that's really benefited from this?
Yeah, we had hundreds. If you go to like our Google reviews, there's just people raving about it. One story was not too long ago, about a year ago, when somebody was under IRS audit and they were freaking out like, oh God, IRS wants to ask all these questions. And so their CPA first got on the phone with them and the IRS agent. A lot of IRS agents, by the way, they don't really understand what a cost seg is. So there's a lot of education involved. But when we got on the phone with them and we showed them all of the calculations and how we took the real data that the owner knew about their property and how we turned that into using our proprietary algorithms into these cost estimates, the agent in that case was like very surprised, and he said, wow, I've never seen anything like this. And there was no adjustments in that case. They said this is good to go. And yeah, that's one of those reviews you can see on Google where they were just thrilled with the outcome.
Yeah, no, that's awesome. That's awesome. Yeah, so I think the benefit of being able to get that report and giving it to your CPA is going to work wonders. I know, so I've been looking at getting back into smaller properties again myself. So this is definitely a website that I'm bookmarking for me, for sure. But yeah, this is awesome, Jan. I appreciate it. I'd like to go ahead and take this time to transition into what I call the final round. It's where I'm going to ask you 4 more personal questions related to you, and it gives our listeners a better understanding of how you are under a little bit of pressure. But nothing too great. You ready to go?
Let's do it.
All right, let's do it. All right. So, Gian, the first question of the final round is, what's the biggest mistake you've ever made when it comes to your finance or business life?
Probably my biggest mistake. Didn't happen too long ago, Mike. It was, I think, in 2022 when interest rates were super low. And in my own business, we were coming off 10 to 12 years of just double digit averaging almost 20% growth year over year. So we grew fast. Private equity was knocking on our door. Valuations are super high at that point in time. And we had a really sweet offer. And I thought, I'm going to roll the dice and keep going. I don't want to take a private equity investment. And shortly after that, of course, you know the story, real estate, our interest rates rose. We have a very shaky economy right now. And probably my biggest regret so far in terms of being able to time it. Anyway, maybe that's a recency bias, but that one kind of sticks in my head.
Sure. You can't, yeah. But the minute you start telling yourself, oh, I wish I would have timed it better, it is, yeah, don't do that. You're just beating yourself up for no reason. Everything's happening for a reason. And it worked out and you're doing great. So don't even beat yourself up over that. But that's awesome. I do appreciate that. So, Gian, this next question kind of ties into the last. And that is, what is something that you've learned that you wish you knew when you first started out?
Something I learned that I wish I knew when I first started. Something I learned, it's a tough one for me.
This could be related to your software. This could be related to when you first got started in cost seg.
I think for me, it probably was knowing that to really build wealth, it's hard building wealth selling your time. And
Yeah, that's
you
fair.
see these software companies right now that they're not selling time, they're selling a product. And as we build our business and we provide tax consulting, it's a different kind of animal, right? And I love doing it, but just 20 years into it, Yeah, I might have taken a different path, knowing that you can probably build a lot more wealth if you try to figure out how to make money not selling your time. And that's what you
Sure.
do in real estate, right? You're investing, you're not selling time, you're buying these things that spit off cash flow, and that's the way to do it.
Yeah, absolutely. No, I appreciate that. Okay. And again, so like I said, these questions tie into each other. So this next one is, do you have any tips or tricks that you would recommend to someone that is just getting started today? And this could be someone that's just getting started in real estate or somebody that's looking to get started doing cost segs for their real estate, anything like that.
I would say get a good CPA if you're in real estate. I think a lot of investors tend to use a tax preparer that may not be super familiar with cost segregation, and that's usually not a good sign if you own a few properties and your tax preparer isn't telling you about this, because it is a game changer. There are real estate clients of mine, and probably ones that you know, that if you can legally above board use the tax rules and essentially not pay tax. It's just, that's the way the rules are written. And if you're not working with a tax preparer that really understands how that's done, probably you might want to rethink and find somebody that is very familiar with the tax rules and how a lot of sophisticated real estate investors are using them.
Yeah. Okay. All right. Awesome. Okay. So, Gian, the final question of the final round for you, and this is just more of an opinion-based question, but do you have a favorite business, investing, or real estate related book or podcast or both?
Mike, it's your podcast. It's my favorite.
Oh,
Is that what I'm supposed to
come on.
say? Actually, I listen to a lot of AI podcasts now because I'm like super obsessed with it and trying
Okay.
to figure out before my competitors do how to inject AI into my business. Yeah, it's a little scary what's happening with AI, and yeah, I think for those that are on top of it, ahead of it, could be a big advantage. So
For sure.
yeah, that's from a business standpoint. That's where I'm at right now.
Okay. That's fair. And then, so follow on question to that. Do you think Skynet's going to go active? It's
Yeah,
my inner
that's
nerd coming out.
no, it's funny. I do think that AI is going to be very conversational with people, and I don't think it's ever going to take over the world like people are saying, but I do see a world where we're going to be talking with robots and like having their own little personalities. Like I'm already seeing it where you could talk to ChatGPT and it's doing that.
Yeah, you can even clone yourself, really. It's crazy. Yeah, as long as we don't have Ultron come to life or anything like that, I think we'll be fine. But and that is still something though to think about. Is there risk? I think there's risk with AI, but I also think there's so much benefit too. And I think what we need to really do is weigh what the benefits and risk are and how deep we want to get into it, right? Because who knows, you might use AI for your business and it might go in and take over and destroy it. You never know. And I'm knock on wood, that doesn't happen to anybody, but I'm just saying, those are the things that just to think about, no matter what you do in life, whether it's investing, whether it's going out on vacation, you're taking a risk every time you step out the door. So I think just be aware of what the potential risks can be. I'm an advocate for AI. I'm not trying to, I hope I'm not sounding like I'm not, but I feel like there's so many unknowns and I'm looking forward to see where it goes. I'll leave it at that.
Yeah,
But
so am I. Yeah, my company just signed a contract for the ChatGPT enterprise version. So now we're going to get all of our employees in there
nice.
trying to play around.
Yeah, I pay for the version that I have because I just think it's amazing. It's helped me out with a lot of things that I do too. But so, Gian, that is it for the final round. So you could pat yourself on the back. You made it through. You survived. Like I said, it wasn't that bad. But I do have another question I want to ask you. And this is probably the most important question of this entire podcast because you put out a lot of really valuable information, lots of golden nuggets for our listeners to take away. And they're probably going to want to know more about where they could find out more information about you. So, do you have a website you could share with us? Any social media? I know you shared where we can get the cost seg study, but if you could just share all that again and
Yeah.
and let our listeners know.
Yeah, look, I'm bigger on LinkedIn than anywhere else, but there's only one Gian Pazzia on LinkedIn. I promise you that. And that's Gian as in Nancy, and then Pazzia. P as in Peter, Azzia. You can find me there and connect. As far as our website with the cost segregation software, it's costsegregation.com. Very easy. What I have here is a promo code for your listeners. They can use it to get 10% off for first time users. And the promo code is Average Joe 2025. And that's all in caps. Average Joe 2025, all in caps. And yeah, it's at costsegregation.com. Just go to the top. There's a button for software and you'll be able to find it there.
All right, that's awesome. I will make sure that we have all of those links in the show notes as well as the promo code. Thank you so much for that. That's amazing. So for my listeners, especially all of you real estate investors, this might be something you definitely want to get after. I think it's absolutely amazing. And just from hearing your story, Gian, and talking with you, I'm super excited about it. Thank you for sharing that with us. Really appreciate it.
You're very welcome. Thanks, Mike. This has been great.
Awesome. It has been. And so I'd like to close things out by asking you if you have any final thoughts for our listeners.
Final thoughts for the listeners. I think, like I mentioned, real estate it's what most people in our country have done to build wealth. And your story is great, Mike, on how you've turned things around and started investing. But that's going into what I said about don't sell your time. Just figure out how you can make money while you sleep without having to use your time.
Awesome. Thank you so much for that. Gian, again, I want to say thank you so much for joining me on the show. It's been an absolute pleasure. I really appreciate you taking the time out of your day to spend some time with us, to share your story, to share this awesome software with us, and just talk a little bit about cost segregation and the changes that have happened and where we think it's going. I think for a recap for everybody, I think it's been a really valuable conversation. So thank you again.
Awesome, Mike.
Awesome. And hey, also, I want to thank all of our listeners for tuning in today and joining me and our special guest, Gian Pazzia, on the Average Joe Finances podcast. Go leave us a 5-star review and tell us what you liked about today's episode with Gian. Aloha from Hawaii, and have a great rest of your day. Thank you for making it to the end of this episode. Greatly appreciate you being here with me today on the Average Joe Finances podcast. If you haven't done so yet, make this the episode that you go leave us a 5-star rating or subscribe to our YouTube channel. The Average Joe Finances podcast is for informational and entertainment purposes only. Have an outstanding day.